News now. Asian markets rose on Friday, putting them on course to end the week on a positive note, with investors even looking past a downgrade of U.S. growth to focus on the next round of top-level China-U.S. trade talks. Now, while the past 5 days have been dogged by fears over the outlook for the global economy, equities from Sydney right through to Wall Street have enjoyed what has been a stellar start to 2019, fueled mostly by hopes of a tariffs deal and the prospects of lower borrowing costs. Over in Asia, the Nikkei in Tokyo picked up 0.8% to 21,205 points, while the Hang Seng was around 1% better off, ending the day at 29,055 points. The Shanghai Composite was a big gainer today, 3.2% to the good, 30,090. U.S. stocks climbed on Thursday as Treasury yields rose off their 15-year lows, and also as investors were optimistic about the latest meetings on U.S.-China trade. Now, the Dow Jones Industrial managed to gain 0.33% to 25,714. The S&P 500 moved up as well by a similar margin, 2,815. 0.3% to the good for the Nasdaq Composite, 7,669 points. Market picture has remained fairly positive across Europe, including locally as well, around 0.33% to the good thus far for the JSE All Share. So a positive end to the week across the trading world, shall I say. Of course, Asia this morning as well, seeing some sense of positivity coming through. So that has filtered through into our local market. But weakness in South Africa's currency as we await the decision by Moody's with regards to that ratings announcement later this evening. Do we get a reprieve from them, or do we even change just the outlook? Of course, currently sitting at stable. Does that move to negative? We'll soon find out. But for now, let's unpack the numbers and how things are faring at present, and we'll dig into them in just a bit. Well, yeah, that market picture, as you can tell, slightly positive. But as you saw, the South African currency not doing as well as one would have liked, certainly. But that Moody's decision later this afternoon, or later this evening rather, will really give a clear picture. But ahead of the elections, does Moody's, who have generally held us in positive light, really decide to cut South Africa off, or perhaps give us another reprieve? Let's chat about that and all the other market movement now. Warwick Lucas from Galileo Capital. Warwick, thank you so much for the time. Let's start off with that Moody's decision later today, your expectations, and what do you think that does to market sentiment for the rest of today?
Well, I suspect that my view is very much middle of the road, which is the expectation of a downgrade in outlook, in other words, moving from neutral outlook to negative outlook, which then basically puts the SA government and SA as a whole pretty much into last chance saloon. That we, from here on in, need to sort out our accounts and our governance and show some kind of plan that we're actually going to pick things up, election or no election. It's we have to look beyond that.
What did one rather say as well that if they took a much more harsh stance on South Africa, that we'd get really just one real smack, you know, and really get into perhaps the gist of things and really start actually getting into it, because now we're getting the proper jolt, whereas now we keep getting reprieves and just a change in outlook doesn't really, change things too much, whereas if we just get, downgraded completely, it shifts focus. Okay,
so in projecting my views onto Moody's, I would say that in a normal environment, excluding elections, they probably would just cut us out of hand, frankly. But because it's so close to elections, the risk for them is they wind up getting involved, sucked into the election process, or being an external noise in the election process. And I think from that point of view, the downgrade in expectations rather than a straightforward cut is for them the ideal decision.
Okay, well, we'll certainly see how things fare. The South African currency not necessarily doing too well amidst that decision, but faring better than just before, just after the interest rates decision to hold interest rates and the repo rate at 6.75%, 14.48. But what do you make of yesterday's decision? Did anything come out of that decision yesterday that perhaps was noteworthy for you?
Not a lot. I think it was a fairly balanced discussion there. We saw a decline both in inflation expectations and GDP expectations, which is frankly no surprise given recent data such as load shedding and so on that's got to have impacted on the economy. So all in all, I mean, it's basically put us in interest rate expectations on a very flat path for the next 2 years, which is probably right. I think we're a little bit too tight, but given potential sovereign issues, a slightly tight footing's probably right.
Okay. Well, February credit growth as well, growing only slowing to 6.03% month on month. An interesting figure when one considers how much, the more that grows, it really signifies a continued growth in the economy. Clearly, it's slowing, shows just how, less and less are asking for credit. Yeah,
absolutely. I mean, a healthy consumer economy would see that figure quite buoyant. I mean, take that on an inflation-adjusted basis. I mean, that's a very weak number. I mean, you would be looking there at about 1.2 real or something. I mean, it's really quite negligible. So it shows that economy across the board there is looking weak.
What do you make of Phumelela Gaming then? I mean, that one has been quite interesting when one takes a look at sectors that are in that space. So the likes of Sun International, and I know it's mainly hotels and the like, but consumer struggles have filtered through into all of those, changing valuations of even things like Sun City. Phumelela is in a similar box. That must have hurt them as well.
Very much so. They are what you'd call a consumer discretionary type stock. So gambling's not really very particularly defensive sector. So in their case, well, I mean, we actually saw a dividend get cut there. Now, this is from a company that really has been a very reliable dividend payer in the past, and they said, no dividend. So they're hanging on to cash to be conservative, and looking at the environment, can't blame them. I mean, the knock-in earnings, it was about minus 18%. I mean, we've seen some much worse hits get taken by consumer stocks, but clearly they are on a very defensive footing.
And it doesn't look good for the entire industry either, right? So things are relatively not looking too good. If you were to look at the week ahead, what would perhaps entice you most about the week ahead? What's something that you'd be interested in?
Well, I think the main thing will be certainty. One way or another, we will know that Moody's is out of the way, and we will know the boxes that are going to have to be ticked. So in terms of corporate news, there's really no companies that I'm aware of reporting in the next couple of weeks, so that's going to be very quiet. I think the main interest is going to be macroeconomic.
Warwick, appreciate your time, bud. Thank you so much for coming through. Warwick Lucas from Galileo Capital.